So thanks everybody for coming out. This is our final workshop of the 4-part series here. Yeah, it seems like everything's been going well, so it's been exciting. But yeah, if there's no burning questions, we'll maybe get into today's material. So again, it's our final workshop, and we have a number of speakers today. So Tim Busby from Montana Secretary of State's office is going to lead us off today. And he's going to be kind of talking about the logistics of actually getting your business started. And then after that, we're going to have a little section on some crop insurance. And then Jan Tusick from the Mission Mountain Food Enterprise Center, Lake County Community Development, is going to come down and kind of give a quick overview on some of the Food Safety Modernization Act, maybe some of the applications there. And there's some new resources that are being developed so that folks can kind of get in line with some of these good agricultural practices that will likely be required for this rule coming down the pipeline in likely 2019 when it actually hits. Let's see here, what else? And then George Haynes right here from MSU is going to be talking about some land lease and things like that. And then we'll have a little farmer panel with friend Max Smith and Mary at the end talking about how they were able to access land at the end. So that'll be really interesting. But first, before we get rolling, let's just again introduce ourselves. Again, just rally around the room here, both for our speakers and for ourselves. But again, I'm Seth Swanson with the Extension Office here in Missoula.
I'm George Haynes from Extension of MSU Bozeman.
Tim Busby with the Montana Secretary of State.
Max Smith, the Missoula Grain and Vegetable Co.
Fred Stewart with a small orchard in Missoula. I'm Brandon Heiser, and we're starting a small sheep dairy, hopefully.
Julie Bell, we have some property in Potomac.
Liz Uhas, I'm with a small CSA. Jessa Dale, raising Dexter cattle.
Von Norston, a small organic cherry orchard.
Ellen Pound, we're developing an old train substation into a bed and breakfast event space with a farm to table aspect where we can grow food around it.
My name's Erin Helm.
Annie Heiser with CFAC.
Sharon Toussaint, have a small farm in Charlotte.
Noah Jackson with H. Brace Farm in Hamilton, Montana, diversified vegetable and meat farm.
And I'm Mary Bricker, also from there.
Great, thanks everybody. So, Tim, you want to lead us off? Can we just pull it up now? Or?
Yeah, that'd be great. Good morning. I'm not off on the opening act, but it's nice to see everybody. I'm hoping that I can help you guys to decide what kind of business you'd like to have and how to set it up. I am the Business Operations Supervisor for the Montana Secretary of State's office. So anyone who registers a business name in the state of Montana comes through my unit. I have some handouts back here and some cards for anyone who needs to get in contact with me, and I'm happy to answer any questions either on the phone later on when you decide what you're doing or later on today. Small business, doesn't matter what they're doing, but small business in the state of Montana is vital to the economic stability of the state. We need small business to produce jobs and to produce the revenue and to make this state a better place to live, to make people able to live here. The Secretary of State's office is here to serve you. We're here to make your filings for your business as simple and as clear as possible. That's why all of our business forms are one page. Whether you're filing for an assumed business name, an LLP, LP, corporation, LLC, they're all one page. That they just cover the basic information required by Montana Code Annotated, Titles 30 and 35. We have a helpline that's open 8 to 5 Monday through Friday, except holidays. And you can call them anytime. They'll be happy to give information. And we also have a website. Now, my particular part is the green tab, Business Services. And what we do, what we have here, we've got where you can get your business forms. You can search for your business name to see if it's available, which means it doesn't infringe on anyone else's name. What we're going to do today, though, is in our help center and start a business. We have a 8-step process that's listed on the website, and it's also in my handout. And what it does is it goes through and helps you to determine the business name, what's within code. It also outlines each specific step to help you create your business. Now, step 1 is always going to be determine your business structure. The business structure is going to determine the amount of control you have on your business, how much input, whether you're going to bring in outside investors, whether you're going to have common stock that you're selling, whether you're going to have membership shares, whether you're going to have a partnership, like a limited liability partnership, where each person puts in a specific amount. There's a varying degree of control on as far as liability goes, how much of your personal assets are protected versus how much are business assets, and the separation between the two. And of course, one of the big ones is tax considerations. Various businesses have entirely different tax structures. We don't deal with taxes, that's Department of Revenue. But you'll hear terms bandied about all the time: S Corp, C Corp, 501c3, 501c4. Those are all tax codes, and those you need to talk to an accountant or tax attorney about, because they can have a very significant impact on the amount of tax liability you have, and it also reflects back on making your decision what kind of tax structure you should have. We can't answer what's best for you. That's your decision. We can give you advice on what each different type of business structure is. We can give you advice on what some of the benefits are. But as far as saying you should be an LLC and you should be a corp, we don't do that. That's your decision. Now, our second step, reserve a business name. This is optional. In some states, it's required you register or reserve a business name prior to filing it. In Montana, it's not required, but we do have the option. What it does is it reserves a name for 120 days, so that if you want to have name protection prior to being able to file your documents, while you're creating your organizational documents, you can file a name reservation to get your protection, and it'll hold the name for you until you file your business documents. The organizational documents. These are the documents that establish you as a business. And there's a variety of them, and each one is different. The first one is an assumed business name. This is sometimes called a DBA, or doing business as. What it is, pardon me, what it is just a business name. It has no corporate protections, it has no organizational structure. All it is Joe Smith doing business as Joe Smith Auto Repair. That is all it is. But it does establish you as a legal business in the state of Montana, able to open bank accounts using that name, able to apply for loans, able to apply for grants, and et cetera, et cetera. It is a legal business type, but it has no protections for any of your personal assets. Then we move on to the certificate of limited partnership. And we also have, to make things a little more interesting, limited liability limited partnerships that have they're a new form that's just come out. Limited partnerships normally have a general partner and then as many limited partners as you want. You can have more than one general partner as well. The general partner is normally the individual or entity that is responsible for the debts and obligations of the LP. They're the person who's legally liable for the business. A limited liability partnership is a little different. A limited liability partnership, each partner is limited to the liability of their own actions and their input into the business. So that if you have 3 partners and partner A does something wrong and gets sued, partners B and C are outside of it because their liability is limited to the amount of involvement they have in the process. Articles of incorporation. People are sometimes scared about what that means. A corporation does not have to be Monsanto. Most corporations in Montana are single individual, single family. They do not have to be a huge conglomerate. What a corporation provides is it provides protection for your assets because the corporation, either a corporation or an LLC or an LP, are all considered corporate entities or individual entities in the state of Montana. That means basically they're individuals. They have the right to own property. They have the right to stand for their own debts and obligations, separate from the shareholders, separate from the officers and directors, separate from the membership. So an individual can file as a corporation. They can name themselves as director. They can name themselves as the officer or all officers if they want. Or you can have as many as you want. In the case of stock, you have common stock and preferred stock. As far as registering with us, we require you have a minimum of 1 share of stock. But you can have 10 million if you want, or however many. We don't follow the value of the stocks. We don't track who owns the stocks. That's under the state auditor. But as far as we're concerned, we don't care how many stocks you have or what price you charge for them. Just that you name that you have 1 share of common stock. We use that in the case of an amendment or any changes you make to the corporation, because in a corporation it has to be any amendments or changes to the original corporate documents, the original articles of incorporation, have to be approved either by a vote of directors or a vote of the shareholders. And in the case of the shareholders, it has to be approved by a number of outstanding shares that does not exceed what we have on our site. We've had that a few times where the amendment was to increase the number of stocks to, say, 300, but the original article said there were 6. Well, 298 can't vote for it if there's only 6 shares that are authorized. Until the amendment's passed, the new amount isn't available. But the nice thing is shares of stock can be sold to raise revenue. This is another area where you need to talk to an accountant or attorney, because the ramifications of the shareholders, you have to have shareholder meetings, you have to make reports for share dividends, that sort of thing. So this is something you need to talk about with your financial advisor. Articles of organization, super popular. Everybody files articles of organization. You can be a single member LLC. You don't have to have multiple people. It's managed by managers or by a member manager. Managers are usually someone who is specifically tasked with the job but is not necessarily a member of the LLC. A member manager is a member as well as doing the management job. There are no limit to how many members or managers you have. A lot of people really like these because they do provide a lot of asset protection for your personal assets by separating them from the business assets, unless you may file a statement saying that you stand responsible for the debts and obligations of the LLC. And in that case, you are directly responsible, not the LLC. But if you do not file that statement, the LLC stands for its own debts and obligations. One other thing on the corporations. Montana is one of only about 14 states that recognizes a statutory closed corporation. Statutory closed corporation differs from a regular or general profit corporation in the fact that it limits who can buy the shares. The share buyer has to be approved by the other shareholders or board of directors before they can buy shares into the company. Also, a closed corporation may decide to operate without a board of directors. A general profit has to have named at least one director, but a closed corporation may operate without directors. We also have nonprofit corporations. Those cover a wide gamut. Nonprofit is normally charitable or religious, but in Montana we also have the option of what is called a mutual benefit. This is like a homeowners association or some other group that wants that kind of protection but does not, they're not doing business for a profit. They don't want to pay profit taxes, but still they want to organize for a specific purpose, such as getting the roads plowed or getting the trash taken out. They do fall under different statutes than the 501c3, which is a tax-exempt organizational code from the taxes, or from the IRS. All right, step 4. Now we get to the fun part. Apply for your tax ID numbers. An assumed business name, many people operate using their Social Security number as their tax ID because it reflects directly back on the owner. But you can apply for an EIN, or Employee Identification Number. And any business that is planning on or has employees should have an EIN, because it's going to be quoted in your payroll and for your employees. The IRS is very good about giving out a number as soon as you ask for it. And we have their number available there. We also have their applications and also some of their codes that are available for different requirements. This Department of Revenue uses its own codes for the state withholding. And you can apply for their licenses, or you can talk to them at their number. And you can also get an unemployment insurance tax ID from the Department of Labor and Industry. Believe me, there's no shortage of agencies that each have their own little piece of the pie when it comes to business operations. And the deeper you get into it, the more you're going to find that. Now, the Secretary of State registers business names. We don't control the businesses. We don't follow their shares. We don't follow their corporate activity. We don't ask for their tax returns. Those are all different agencies. All we do is we register the names and make sure they're within Montana code to register in the state of Montana. Local licenses. These are confusing to everybody because each city, each state, or I'm sorry, I skipped one, didn't I? Professional licenses. Professional licenses are usually for a type of business that requires you to take a state test. Nursing, barbers, electricians, land engineers, that sort of thing. If you're not doing any of those, then you're probably pretty good. But if you have questions, the Montana Department of Labor can help with that as well. And they're also the ones you go through for your contractor exemption if you're doing any business that involves contracting. Mostly people consider that when they're talking construction, but it can cover a wide range of issues. All right, the local licenses. Now I'm caught up. Every city and county has their own specific requirements. Not every county requires business licenses. Not every city does. Some places, both the city and the county require permits. So you need to go to your city-county building and talk to the clerk and recorder to see if there's anything required. We don't deal with those. They fall outside of state jurisdiction. We can't tell you if there are any requirements for Missoula County or Gallatin County or Webo. We don't know. You need to talk to those city counties to get that specifically. All right. Step 7, workman's comp. Department of Labor and Industry will get you this information and help you get signed up. You have employees, you need workman's comp. All right, step 8, file an annual report. This causes a lot of people a lot of grief, but it shouldn't. The annual report is required of corporations and LLCs once a year between January 1st and April 15th. If it's filed between those, in that period, it's $15 a year. If it's filed after that period, it's $30. But if you don't file it, then your company is involuntarily dissolved, administratively dissolved. And you would have to reinstate your company in order to go back into business. And you can only reinstate for 5 years. And we've had some people that come in on just right out the wire. But all we ask, as far as the Secretary of State for the annual report, what we require is just to confirm that the information we have is correct. Your registered agent is the same one you had. Your officers and directors or members and managers are the same ones you had. The addresses, principal business office, mailing addresses are the same as they were. That's about all it is. We do not ask for a statement of corporate activity. We do not ask for any tax returns, anything like that. And you can actually go online and do it in about 3 minutes, 3 to 5 minutes. It's pretty quick and simple. But it is something that's important because we have to have that information as accurate because banks come to us, federal agencies come to us, Dun & Bradstreet look to our website to make sure that is an active business entity in the state of Montana. All right. Yeah, when you're doing your annual report, you may reflect changes in your principal officers or directors, members or managers. You can't make changes like change your name, the business name. You can't make changes like changing from a general profit to a statutory closed corporation. Those require amendments. But as far as making changes to your address, your registered agent, that sort of thing, you can do it on the annual report. All right. Sure. Oh, okay. All right. Those are the big things. Now, filing with our office, we do not have online capability, which means unlike states like Colorado, where you can go on and in a couple minutes set up a business with a credit card and be done. In Montana, you have to print off the forms, which are available on the website, fill them out, and send them in with your filing fee. Normally, we run about 5 days out, because every business that operates in the state of Montana comes through my unit, and I've got 6 compliance officers. And we normally deal with around 40 to 50,000 business filings a year, plus. If you count in the annual reports, jack that up by another about 130,000. So it's a lot of work for a small unit of people. But right now, it takes about 5 days normal filing under normal conditions to get your business name processed, and we'll issue you a certificate of filing, which states that you are an established business in the state of Montana and authorized to do business in the state. Now, probably one thing I should clarify, under Montana code, if you're doing business under your true and given name, Joe Smith, and you're doing a, I don't know, handyman service, you don't have to register with us. But the second it becomes Joe Smith Handyman, that's a business name. Then you would need to register with us.
And you mean like anytime you print a business card that has that on it, or anytime you...
Yep. Anytime someone writes a check to you, Joe Smith Handyman, the bank won't cash it because that's a business name, and your business doesn't have a business account with us. So just something to consider when you're thinking of if you should register and how you should register. Like a lot of people, especially in agriculture, I see a lot of filings for someone who is, I don't know, raising a small crop of something special. I don't know, just as an example, say they're raising sheep. We were talking about sheep earlier. So say they're raising exotic 4-horned sheep. As long as it is Levi raising 4-horned sheep, he can sell them, he can do whatever. But the second it becomes Shady Brook Farm, then it's a business and needs to be registered. Yes, ma'am?
If you did the opposite, let's say I did have a business account in my business name, and someone wrote me a check to buy my vegetables in my name, because I'm a director or whatever of that business, I can then deposit that into my business.
You're an authorized signatory for the company, an authorized representative. Correct.
Can that sometimes, like, I've heard before that if you have an LLC or a corporation, that if somebody writes you a check, it can, like, the benefit of having an LLC or a corporation, right, is that there's this veil between your personal assets and your personal name and the business's assets.
Mm-hmm.
And that if you ever get sued, one of the things that they're gonna try and do is pierce that veil and get into all of your finances, because with an LLC or with a corporation, they can only, if you get sued, they can only access the corporation's finances, right?
Right.
So having things written to you in your name, or having things where you're writing a check for something that's a business expense, but you're writing it with your personal account,
Mm-hmm.
can
Muddy the waters?
yeah, muddy the waters, and can cause them to argue that they should be able to
Right.
access all of your personal assets.
And that is legal. Though that's a legal question, I can't make a direct answer on, because we don't deal in applications of law in that manner. We set up the corporation or the LLC. Now, as a broad general overview, yes, a limited liability company or a corporation do provide separation between the corporate assets and the business assets. Your activities in behalf of the business as a director or officer do not necessarily reflect back on your personal assets. Normally, if you keep them separate knowingly, it helps. But there are situations where a bank asks for a personal guarantee, which would attach your personal assets to a corporate loan, for example. Those are things you need to be aware of and talk about with your financial advisor or attorney before you do it. Can I answer any other questions for anybody?
What kinds of business structures are folks thinking about doing?
I did see a lot of LLCs, so I was curious whether that was around, actually.
We did a general partnership, and it's not that we won't switch to it, but just in talking with a lot of other friends who have businesses, they had suggested a sole proprietorship or general partnership first, because we don't have enough separation between our personal and business. Like, we don't have enough of a chunk to be able to try and really keep it separate. And so they had suggested kind of trying to go that way for a period and then switching. So that's what we're gonna do.
How hard is it to switch? Let's say you're in a general partnership and then you want to be an LLC.
Okay, a general partnership that's filed as an assumed business name. If you're wanting to file a corporation under the exact same name, you would cancel the assumed business name or change the ownership to the new corporation.
So it's doable.
It is doable. It's not that hard. A corporation, as a legal business, as a legal entity, can own an assumed business name. And because of the name protection that's inherent in all business structures, if you have an assumed business name for, well, Shady Brook Farms, and you want to become Shady Brook Farms Corp., name's not available unless you cancel the assumed business name or amend it so the corporation owns that name. Then the Shady Brook Farms Corp. Can own the assumed business name Shady Brook Farms. You'll hear sole proprietorship thrown around a lot. It's kind of misleading. Sole proprietorship means there's just one individual. A sole proprietorship can be an assumed business name, it can be a corporation, it can be a single member LLC. So to just say sole proprietorship doesn't give a lot of information. Okay? Does anybody else have any questions? Yes?
Oh, I was just gonna ask, who do you recommend, like, how do we find, I keep running into this, people, all kinds of people saying, I can't tell you what you should be.
Mm-hmm.
Who is it that I can call and I can sit down and say, you don't have to tell me, but let's go through the list of what we should be so we can make that decision?
Actually, you can call us. And we can tell you, yeah. Well, what we can do is we can go through and say, this is the benefit of this business structure. This is what this business structure does. We can't say, you should be an LLC.
Right, I've been through your whole website and the like grid, the
Mm-hmm.
pluses and minuses of each, and it still says, go talk to a tax attorney,
And there's a reason for that.
So, I mean, how do we find the people with that expertise?
Well, mm-hmm.
Like, what do we look for in their business practice, their legal listings or?
It boils down to you doing your homework, because in our case, we can explain what the businesses are. An accountant is going to tell you, look at your books and say, you should be this. A business attorney is going to look at your books and say, oh no, you should be over here. Everybody, when all you got's a hammer, the world's a nail. So everybody has their own favorites, what they like. Right now, everybody and their dog is filing it for an LLC, which is fine. It's fine. They can do that. It may not be the best structure for that individual, but they have every right to file as an LLC. And then at a later time, if they don't like it, they can change. They can, in many cases, they can merge out into a different business. They can cancel or terminate the LLC and file as a C Corp or as an S Corp or as a statutory closed corporation or general profit or even as a non-profit. A lot of it is going to depend on your individual business and how you are operating it. We always say we can't tell you you should be this, that, or the other thing. We don't have any idea what your finances are, what your investors are, what your status is, where you're going. We don't have your business plan in front of us. We can't give you that information because we don't have all the information. Yeah, it'd be simple. We could say, yeah, you can file as a corporation tomorrow. May not be right, but we could tell you that.
I guess my question is, what's the most concise way, or the, do we need to talk to 3 different people to get that, an accountant, a tax attorney, a bank, or I think we're looking for sort of the most efficient pathway to make that decision, which of course in the end comes down to us. But the quickest, most efficient way to get the necessary feedback.
Welcome to business law.
Yeah, and I think we were real under time pressure, and we filed as an LLC recently, specifically to take advantage of state, national grants and funding. The waters are a bit murky because we're making huge investments from our personal savings now into basically our farm property infrastructure, but we just filed it as an LLC.
Mm-hmm.
Specifically, we have a good accountant in town who we recommend to anyone, and a great attorney who gives us very, very low cost, and they're both widely respected in our community. We didn't talk to Amita, we talked to her last year, but they both said different things, and we, just took weeks of our bandwidth, and we just made a decision because we couldn't figure out the time.
Were the accountant and your attorney able to give you advice on it, or were they willing to give you advice?
Yeah,
on it?
they were, but it was just too murky. You put a few hours into it one week, and I put 5 or 10 hours into it.
It just, they kind of get the same. It depends on what you, from different, like you were saying, people may have different perspectives.
Mm-hmm.
Yeah, but other stuff to do.
Were there primary pros and cons that you were
Yeah.
just trying to?
Like
kinds of
you
studies?
mentioned, the liability issue, we are interested in having a farm with a lot of community events and participation and bringing people onto the property, and that changes the personal liability. So thinking about that, risk management, basically, like probably some other parts of today's workshop will cover.
It also has huge ramifications for our farm insurance as well. And we have a wonderful farm insurance agent, but as we added different types of liability as an LLC to our farm insurance, the fees went up significantly, and it got very, very complicated to the point where we couldn't have a policy, so we tried to keep it as simple as possible. So it affected our whole farm insurance, which is also our home. Not our, basically our one policy, which is basically the farm and the home.
Mm-hmm.
So it got pretty complicated, and we just said, okay, we'll file as an LLC and go from there.
Now, one thing too, when you're in a situation like that, if the farm is under your name as a personal asset and the LLC is operating on it, you would talk to a lawyer, but you would probably need to have an agreement or a lease so that the LLC is operating or has official authorization to use that property. Then the liability goes back to the LLC as opposed to your personal. Because if the LLC is holding an event on your property, it's your problem unless you have something saying, no, the LLC is taking responsibility for this. You got to start thinking basically as a split person. And that can be very difficult. That's why people who are trained in business law, believe me, I argue with lawyers day in, day out. A lot of lawyers are set up for civil law or for divorce lawyers. I get divorce lawyers all the time that are trying to file a business. It doesn't work. But just, you need someone who actually works in business law. because it is a very distinct discipline from all the other types. And the ramifications of what can happen if you don't follow those laws can be significant. So that's why we're always saying constantly, talk to your lawyer, talk to your accountant. The accountants are great for the financial, the lawyers are good for the law.
And it should be someone experienced in business law.
In business law,
Yeah.
not a general practitioner, because a lot of them, yeah, they can charge you $200 to send in your $70 filing, and they can fill out the 5 spaces for you, but as far as understanding exactly what they're doing for you, may or may not. It's a very distinct discipline. Oh. I hope I didn't scare anybody off.
No, and I think that was kind of the answer to my question is you don't want to just walk in to general law practice because they're down the street, like you want someone.
You want a business attorney, someone familiar with business law.
I think to speak to what you're saying too, you want somebody that you can work with long term. Like what we're finding is we want to find people that we trust, like you're saying, the accountant that you trust, the lawyer that you trust. So as our business evolves, they can evolve with us and know what's going on instead of explaining everything new to them every single year. So
Exactly.
kind of nice to have.
And actually, one nice resource too that not everybody goes to, a lot of banks in their capacity as a financial advisor can have a pretty good grasp of what's going on in the business world and the business community because they deal with it every day. They have business loans, they actually deal with a lot of business law. And they can be a good resource, especially if you've got someone who is promoting business as one of their clients that they're trying to get is businesses to file or to open accounts with them. Some of them will have on the order of a loan officer, but he'll be a business advisor. Not all banks do it, and not all banks really understand it. Banks tend to have a high turnover, but they can be a resource, especially in smaller towns where you've got one banker who's been there for 35 years and knows everybody and opened your first account when you gave him them 2 nickels. Those guys can actually be a pretty good resource. They've got a lot of experience. All right.
Any other questions for Kim?
Can you have an LLC and a nonprofit?
Sure. They're separate business entities, and they would be taxed separately, and you would set them up with individual articles. But yeah, you can have them. There's people that have 10, 15, 20 different businesses that they're associated with.
And you want to keep all your finances separate.
Mm-hmm. One way a lot of people do is they'll establish a corporation, and then if they have various pieces that they want to have of their business, they will set up an assumed business name for each of the businesses. Joe Smith Farms, over here you've got Joe Smith Dairy, over here you've got Joe Smith Cheese Factory, over here you've got Joe Smith Meat. And they use that as a tool to keep the finances separate, but all those assumed business names reflect directly back to the corporate entity that owns the business names. Okay? Well, thank you. I appreciate it, and please feel free. I've got business cards and a little handout of the sheet of what I was just talking about for you, and I'd be happy to give anybody a hand if they need it. Thank you.
Thanks a lot, Tim. So those of you listening online, I'll put a link to the website that Tim was kind of following along with. It'll be a little bit more.
I put it in the chat.
Oh, you did? Okay, great. I guess.
And it's in there's like a shortened version of those 8 steps plus a couple of others that you might think about in chapter 5 of the book.
Great, Fantastic. So next we have Mark Masters here, going to be giving us kind of the basic rundown of some crop insurance. So Mark, can you pull up your presentation here?
Good morning, everybody. How we doing? Good, good. I've been asked to give you a little spiel on crop insurance. I could probably spend 3 days if you really wanted to talk details of crop insurance, but I've got 20 minutes, so you're going to get a snapshot from satellite view of what we offer for crop insurance. My name's Mark Masters. I'm the Regional Vice President, Branch Manager of QBE NAU, which is one of 17 private crop insurance companies in the United States. We're the third largest company, and we write in all the lower 48. Don't write in Hawaii or Alaska, but we are owned by a company, QBE. QBE is a company based out of Sydney, Australia. They're our parent company. They bought us a couple of years ago, and they're one of the largest insurance companies in the world. So we have lots of financial backing, even with as bad as crops have been in the last couple of years. We've been able to pay all our claims, along with all the other companies. This is just a little bit about our company, as far as our ratings with AM Best and Standard & Poor's. QBE NAU doesn't really stand for anything, so we just call ourselves Alphabet Soup. QBE used to stand for, it was 3 different insurance companies: Queensland Bank, Brokers and Equity Insurance. They were merged. They were English and Australian insurance companies that merged back in the 60s or 70s. And then NAU used to stand for National Ag Underwriters. It was such a long name, they just dropped it. So we're just NAU and now QBE NAU. So yeah, 6 letters that mean pretty much nothing. As far as where we're located, I run the Northwest Territory, which is Montana, Washington, Oregon, Idaho. We have 2 offices in Montana, one here in Missoula and one in Great Falls. So if you need to come talk to us, we're located at the Mountain West Bank right up here, just up the street, 3rd floor. And then our other office is in Great Falls. A little history about crop insurance. The concepts actually came out, they were actually created by Benjamin Franklin back in the 1700s. But standard today's crop insurance really started in the 30s. The federal government had control of the crop insurance policy from basically 1930 till the 1980. So it was all done through today's what they call as Farm Service Agency. Used to be ASCS, some of those other outfits. But in 1980, under the Jimmy Carter administration, they merged it with private industry. The government kept losing money, so they thought, well, maybe private industry can turn a buck. So we service the policies, underwrite the policies, adjust the claims, and we use federal monies to do so. Okay, so everything is supported by the Farm Bill through the government. Participation was pretty slow in 1980. It started growing as we got closer to the millennium. And then they started adding new crops. They started adding new policies, new provisions, making it more affordable for the producers. And then, in the 80s, we had all the droughts. The crops just were terrible, mainly in the Midwest and Northwest. In 88, the government said, okay, if you want to get program payments, if you want to get any kind of disaster payments, those kind of things, you have to buy some sort of crop insurance. So that's really what kind of spurred the interest from producers. In 1993, we had all the flooding, and then they instituted what they call prevent plant. So we actually pay farmers if they can't plant their crop due to weather. So crazy stuff. 95, 96, we used to have policies that were just strictly yield-based. So you were guaranteed a certain amount of production, and if you fell short of that production, you got paid whatever price the government set. In the mid-90s, they came out with revenue products, which actually looked at futures markets and figured out the value of crops, not only when you seed them, but when you harvest them. And it made for a better policy for producers. 2009 is when participation really took off. The weather that we had in the 2000s to 2009 in the Midwest, people just got more involved. Some of the government payments started to go down, and people saw crop insurance as a safety net for staying afloat. So, and now in 11, we have new provisions, and up to this year now, we have 17 different plans of insurance, and we're covering over 128 crops in the nation. So that's kind of what crop insurance, the history of crop insurance. This from 1981 up to 2013 shows what our loss ratios were. So for every dollar we took in, we paid out that many in dollars. You can see like 88, the drought. For every dollar that came into the program, $2.39 went out. So not a good year to make money. But you can also see recent years, it's really gotten more sound. You know, I think farming practices have gotten better. Farmers are growing better crops. You know, our loss ratios have gone down. This 1.1 is the break-even point for the program. The government says if they can make a 1.1 loss ratio, 110%, so pay out $1.10 for every dollar that's brought in, it keeps the policy solvent, keeps the program solvent. So 2013, we're just finishing up 2013. Our loss ratio right now is 97.8. The industry is at 97, so we're tracking pretty much right with the industry. So for every dollar we took in, we paid out 97 cents. Doesn't leave much for profit at the end of the year, does it? The thing about the program, the federal crop insurance program, is we have to try to put this into words here. We have to follow civil rights, so we can't discriminate against anybody on any one of these things, and this is just general stuff that the U.S. Department of Agriculture prohibits that we discriminate for any of those reasons. Why is the government involved in crop insurance? You know, crop losses tend to be correlated. When drought and flood, and you know, when they strike an area, it's usually pretty widespread. Private companies could not survive. There's too much liability out there. There is no way we could survive without government assistance. Same thing that the amount of money that's out there as far as liability on the farm is way too big for any insurance company to survive. So we use government monies through the Farm Bill, through us as taxpayers, to help pay for crop insurance. Catastrophic losses have come in and just totally wiped out crops in certain areas, and there wouldn't be an insurance company in business right now if it wasn't for government subsidies.
So question,
Mm-hmm.
when you say the break even is 1.1, obviously somebody's losing money.
Right.
So is that 10% the subsidy that comes in from the government, or something greater than that?
Oh, the subsidy's greater than that. It's about 50% of the premiums. And then they also pay us as insurance companies to service the policy. So the government's never going to make money on the program. I mean, we as taxpayers are never going to make it. It's there as a safety net to, one, keep the farmer afloat because of his high costs, and two, because the American consumer demands cheap food. There's no way that a farmer would survive based on the price of food today. So as an industry, the government looks at it as 1.1, and I'm not quite sure how this all works, but that's their goal to what they call a break even. Of course, we're talking about government, so you know, the government never makes money. They like to spend money. So I don't know how else to answer that. That's just what they tell us, that that's their target loss ratio in a given year.
But you can stay in business with a loss ratio of 110% because the government is making up a significant part of it, and you, the private sector, can stay in business?
Yes, yes.
Okay.
Yeah. We take a risk along with the government on policies. So with our risk, we also go out and we purchase what we call reinsurance or stop losses. So when our loss ratios get to a certain amount in a state, these stop losses kick in, and then we buy. It's basically insurance for insurance companies. So we use that as a safety net to keep us in business. Also, when we get into a policy, we have the right as a company to assign it into two different funds, what we call different risk funds. The first one is commercial. So what we do is we look at the types of policies that we think are not going to have losses, and we will take more of the risk on that policy. Or we'll look at somebody that's typically not a good farmer, and we can put them into an assigned risk pool. And what that does is it puts most of the liability on the government dollar instead of our dollar. So those are just a couple things. We have an agreement with the government that's called a standard reinsurance agreement. It's our agreement that gives us the right to do business with the government and spend taxpayer dollars. When we assign policies into these funds, we can look by counties, we can look by different crops, and we can look by different policyholders individually and determine whether or not we want to put them into a commercial or assigned risk fund. So who has roles in the industry? Risk Management Agency, the RMA, they are the government. That is a department of the United States Department of Agriculture. They write the rules, they write the policies. We are the AIP, or the insurance provider, so we are the company. We contract with independent agents throughout the states, and so that's the person you would go to buy a policy if you were interested. And then, of course, you would be the insured as the farmer. So RMA, the Risk Management Agency, and I do want to apologize. We talk in a lot of acronyms in this industry. So RMA is the Risk Management Agency. They set the policy, they make the rules, and write the regulations. All the rules are the same, all the premiums are the same for all of the companies. So there is no competition as far as rates. We can't sell it cheaper than somebody else. They set all the rules. They provide the reinsurance to the companies. And then we as a company, again, purchase additional insurance in case of bad losses. They provide us a reimbursement to administer the policies. And it's called an A&O reimbursement, administrative and operating expenses. And then they subsidize the farmer when they buy the policies. And depending on what level of coverage you buy, that subsidy can be anywhere from 30 to 60%. So, who is the company? We are the AIP, the approved insurance provider. We reinsure the policy with the government. We service the contracts. We determine which programs we want to participate in. We don't have to participate in all of them. We decide how to fund each crop. Commercial or assigned risk. We establish commissions that we pay to our agents, and which have to be within their rules. Train the agents on the servicing of the policies, and then we hire the adjusting staff to go out and work claims, measure bins, that kind of thing. The agent, their job is to educate the farmer on what policies work best for which producers. They access the farmer's risk management needs, do quotes and comparisons on the different plans, different policies, and then talk about different options that are available for different crops. Update the farmers on unit structure, and we'll talk a little bit about that. I don't want to get too in deep with that. Deal with production histories and deal with claims histories. And then you as the insured need to understand your risk management needs. What do you need to cover that you couldn't afford to lose? knowing your input costs, your break-even points, understand what's involved with risk management, and what is your tolerance for risk. And then, should you contract your grain? I mean, I'm not sure exactly what everybody does in this room, but should you sell it at the time you harvest it? Should you store it? Should you forward contract it? How much of that should you do? And what do you want to guarantee yourself every year as far as production? I apologize, I'm fighting kind of a flu bug here, so. What causes losses out there? You can see 5% is cold or freeze. It's kind of hard to read this on the screen. 5% is disease, 4% wind, hurricane, 1% flood, 1% insects. You can see drought and heat and excess moisture make up about 60%, 65%, almost 70% of the losses out there. And then hail is only about 13%. So that's what gets the crops. What is covered under the policies? Anything that Mother Nature can do to you. Adverse weather, fire, wind, earthquake, volcanic eruption is actually covered under the policy. And failure of the irrigation water supply. So if we drought out and you don't get any irrigation water, that is a covered peril under the policy. Anything else that Mother Nature could do? You know, if it's something that you do to the crop, put too many chemicals on there, that's not covered. So that's kind of what the policy covers. And do farmers need crop insurance? I mean, just consider this. You've got a farmer that's got 1,500 acres. I'm not sure where everybody is in this room. You got 1,500 acres out there, 750 acres of corn, 750 acres of wheat. You take that times a yield of 175 and 50 on wheat, you're looking at over $1 million of revenue out there. So if you lose that crop, can you stay in business? Probably not if you're not insured. So about 94% of the farmers in the U.S. take crop insurance of some sort at this stage. So this is just a snapshot of the policy. There are pages and pages of policy, rules and regulations. Like I said, everything's written by the government. So this is just a snapshot of the basic policy. It covers everything, okay? Then each crop has its own crop provisions, and then each county has its own special provisions that are special to that county. So there are pages and pages of rules and regulations for all the different policies. What are our main types of plans? We've got APH, yield protection, and revenue protection. Here again, I'm talking in acronyms, and I apologize. These are our major types of insurance. These are for the standard crops, you know, your wheat, your barley, your corn, your soybeans, potatoes, fruit, you know. Those are our standard types of policies. And again, they're federally funded and administered by private companies like myself. It allows producers to participate in their own risk management. All these policies are individual policies. So you as a corporation, if you have a corporation and a personal farm, you can have two policies in the county. All of these use what we call APH. APH is actual production history, okay? What you have is you're building a history on a piece of ground, and you supply that to the company as to what you can grow on that piece of ground. Then you buy insurance based on a percentage of that history, and that gives you your guarantee. And then you are guaranteed so many bushels for a given year on that policy for that, what we call unit. And if you fall below that, we pay you the difference. So that's kind of, excuse me, how that works. I apologize. Really struggling with my...
Are we gonna get to the AGR?
A little bit. I have a little bit. You want me to get through this and go to that?
Just because we just have 10 minutes left. And I
Okay.
think that might be.
Okay, I had a feeling this might run over. I'm sorry.
That's okay.
There's also revenue, and I'll go through this quick. There's also revenue. This guarantees you a fixed amount of a commodity, bushels, pounds, tons, depending on the commodity. There's revenue policies also available that cover you for dollars and look at the value of crops at the beginning of the year and at harvest time, and if prices drop off, you can get paid there. I'm going to skip through this and get to some of this other stuff. Will they have copies of this?
Yeah.
Okay. Okay.
Yeah.
So this kind of just shows what a guarantee is. The guy's got a 70 bushel average on a piece of ground. He took the 70% coverage level, which is your deductible, and he has a 49 bushel guarantee. At harvest time, they harvest 39 bushels. You're 10 short, times the price of $270 that was set by the government, and we would pay you $27 an acre. So that's pretty simple stuff. I know it's going fast, but you wanted me to get to a couple other things. I'll skip this. Does everybody understand section, township, and range? Everybody's got that. So that's how we identify where you're at and how we set up your structures. So I won't go into that. I didn't time myself on this, and I apologize. So this talks about units, and I'll skip that. That's what your agent's going to be able to help you with that. Just a quick thing on the insurance plan. There are dates that you have to sign up for the program for. And so actually for 2014, we're past that date. So I can't really sell you a policy until next year. But the application process is usually in the spring. March 15th was our sales closing date for spring crops. That's when they buy the policy. Once you buy the policy, then you set up your histories on your APH. You supply your acres for the current year. If you sustain a loss, you would turn in a notice of loss. We would send out an adjuster, adjust your claim, and then make a payment. Crop insurance, like no other insurance, you don't pay for it till the year's over, okay? So if you have a loss, we would just deduct your premium out of it and then pay you the difference. But then at the end of the year, if you still owed premium, you would have to pay it. So only kind of insurance like that. These just talk about the different dates, when you have to sign up, when you have to report productions, when you have to report acres, when you get billed. Some other dates, final plant dates, acre reporting dates. Some other things that we offer. This is kind of off this now. We do have some livestock insurance. So if any of you are writing livestock, we do have some livestock insurance. We can cover cattle, swine, or lambs. These are not mortality policies, okay? They're market policies, so you're betting on the value of your commodity at a specific time. You buy the policy, tell us when you want it to expire. If your value goes down, we'll pay you the difference. If the prices go up, you get nothing. Kind of like buying a put from your stockbroker.
Is there kind of like a typical scale at which that would make sense to get involved in? Like how many head would it make? Is there something?
I don't think there's a limit as far as how low you can go. So if you just want to test it out with a couple, you can.
And it's strictly for meat production?
Or dairy. Or dairy.
For breeding stock market?
Not yet, not yet. And we are working on a mortality policy too. So, which I think people might have more interest in, especially if they're calving in February in Great Falls or something. So, this product is geared to more, I would say, smaller farms. It's geared towards. How this works is in lieu of setting up an APH, you're buying a policy based on your income. Okay, so it works off your tax returns. You have to supply 5 years of Schedule F filings that you supported to the IRS, and you can purchase this policy. They're working on trying to figure out some way to do it for people that haven't been in farming that long, but right now we don't have that. So right now you need to be in farming for at least 6 years before you can buy this policy.
Is that across the board in your industry or just your company?
That's across the board. This is a government program. Yep, everybody has this. There's AGR and there's AGR Light.
This year, if you haven't filed yet, file Schedule F.
Yeah. It covers pretty much everything you can think of under the sun. Everything. The only exceptions that I know of are Christmas trees. If you have Christmas trees, you can't do that. If you have animals for show or sport, they're not covered. And there was one other thing that I can't remember. But pretty much everything, I mean milk, eggs, everything that you report to the IRS, you can purchase this policy for.
Soybeans?
Yeah, yeah, even soybeans, even corn. And what it does is it guarantees you a percentage of your 5-year average. Okay? So, you know, if you buy the policy, let's say you've been farming 6 years and you want to buy it next spring for 16 or for 15. You would have to supply us 13, 12, 11, 10, and 9 Schedule Fs. We would come up with a 5-year average on that Schedule F. And then you buy a percentage of that. If you have a loss the next time you file your taxes, and there's a bunch of forms you got to fill out. There's inventory and accounts receivable forms. There's annual farm reports. But if you have a loss and you lose money below your trigger point on that 5-year average, you could get paid. So.
Is that reported as income?
Yes, it's gross income.
So you have to pay tax, I mean, if you fall below your average and you get a payment from insurance, is that payment considered taxable income?
Yes, yes. There's a spot for crop insurance payments on your Schedule F. So yeah, it is income for that year whenever you get paid. But for like 15, you wouldn't get paid until 16 because you're not going to file your 15 taxes till 16. So then it would be income for 16. Yes.
Does this insurance only cover that year's production? So say you have some kind of product that takes a while to get established, like a fruit orchard,
right?
And all of a sudden it's all wiped out. Are you
right.
You're only compensated for what you missed in that year's production, or in 10 years it's going to take you to grow more trees again? You are
covered for the crop that you're growing that year.
Okay.
Okay. That year could be your calendar year if you're a calendar year filer. It can be your fiscal year if you're a fiscal year filer.
So what kind of insurance would you get to compensate you for the rest of that loss? Because
the loss of your trees?
Yeah, you would essentially lose 10 years of time to be able to rebuild it.
I don't know of anybody that offers any kind of mortality on fruit trees.
Okay.
I don't know of anything. I've never heard of it really happening. I guess it did happen on some cherry trees up in the Flathead a number of years ago. That's right. That's right. That was quite a while ago, though, I think, wasn't it? Or was it just recent?
No.
I don't know. Some grape. Yeah, some grape growers in Washington lost some vineyards too, I think.
Just
but
producers in the bitter that lost through fires.
Oh, fire, yeah. I don't know of anybody that offers any kind of a insurance against the actual plant, the actual orchard. So we're just covering the crop that you're growing that year.
Okay.
Yep. Any other questions on this AGR? I mean, I have a 3-hour presentation I could give you on that alone. So.
Are they doing AGR Lite anymore? Or?
Yeah, we have a few. We have probably 50, 60 policies in Washington.
What's the difference between AGR and AGR Lite?
AGR Lite limits the liability to $1 million, and AGR Lite or AGR regular is 6.5 million.
So it's
So,
cheaper.
and for 15, they will merge the two programs. There will not be both. So that's part of the new farm bill, is to merge those two programs into one. So I'm assuming what they'll do is they'll probably find a happy medium somewhere, or just go to the high end. So, because in essence, they're the same program. Few little things here and there, but in essence, the same program. So, but like I said, you can insure pretty much everything.
And you can insure different crops within one operation, right?
Yes. You can insure, I mean, I have one, actually one that I'm working on right now, and a guy's in Georgia. I'm working on a guy in Georgia that's, he's about 30 acres of vegetables. Okra, tomatoes, strawberries, blueberries, blackberries. And he's got like 30 different commodities on those 30 acres. So, yeah, it works. It works for him. About the only policy I can sell you right now is a crop hail policy. We offer a private product that is it's our own program. It has nothing to do with the government, and it basically covers you for the perils of hail, fire, and transit. So if a hailstorm wipes out your crop, I can pay you for that crop. Producer covers the crop at a set price not to exceed the value of the crop, and you can purchase it any time up until August 1st. Losses are adjusted straight on percentage. So if I got 10 acres of apples insured at $2,000 an acre, I've got $20,000 of liability. Have a loss, the adjuster goes out and determines a 45% hail loss. We pay you $9,000. So, pretty straightforward.
To the first place of
storage?
Transit, what that is typically, the only time we've ever paid it out is like a wheat farmer that has filled up his truck, his field truck from his combine, and he's driving it to the bin, and he crashes and loses the grain. We would pay the grain in the truck. But it's the first place of storage in the policy, so. And then if they have us put this up, you know, if you know somebody that's in the crop insurance program and is not doing things by the book, there's a toll-free hotline to make an anonymous call. So, any questions? If you are interested in talking to anybody, I've got a few names here of some people that are agents, licensed agents that work with my company. This guy's a Grizz, this guy's a Bobcat, so you can pick which one you like. Kevin's here in Missoula, Sean's in Great Falls. So there's names, the company they work for, and their cell phones and email addresses. So if you're interested in obtaining a quote for any kind of insurance, if you want to talk about AGR Light, those kind of things for next year, those are the contacts to talk to. So.
Thank you.
Yeah.
Any questions for Mark?
I have just a quick question.
Sure.
How many, most of us are pretty small, you may have gathered from our introductions. How many people have that kind of smaller scale or direct retail sort of diverse farms work with your,
You know, typically we're always to the traditional. I mean, our business, our industry is geared to the traditional farmer.
Yes.
You know, the 2,000 acre wheat farmer or the 1,600 acre corn and soybean farmer. The new farm bill, I will let you know, the new farm bill is really pushing for small farms, for new insurances for small farms, more organic pricing to cover you for what what your crop's actually worth if you're growing organically. But these things are going to take a little time yet. They're still writing the rules and the regulations, so probably 15 or 16 is what we're looking at before some of these things happen. But as far as hail insurance is concerned, no farm's too small. There's a $50 minimum premium amount, but it doesn't take much to get to $50 a premium. But typically the traditional crop insurance policies and programs are geared to your traditional farmer, not your small organic farmer.
Just out of curiosity, I noticed that things like drift are not covered. Is there any
Chemical
push-
drift?
Chemical drift. Is there any push for anybody insuring against that for people who are interested in going into organic farming?
A lot, if you talk to your agents, a lot of farm policies will cover you for that. So, part of your farm policy, crop insurance the federal crop insurance is Mother Nature, strictly Mother Nature. I mean, even fire. A combine starts a fire, that's not covered. Lightning strike starts a fire, it is covered. Okay, so as far as chemical drift, and I think some of that is covered, especially if like your neighbor does it, that should be covered under his homeowners or farm policy, not under the federal policy. Any other questions? Hopefully there'll be some new stuff coming for the smaller farmer here in the next few years because the Farm Bill really is pushing it. The new 14 Farm Bill really pushed for a lot of new things that are supposed to come our way. So hopefully, maybe I can find something for you. I need to talk to you on an individual basis to see what kind of operation you've got though. So anyway, thank you.
Great, thanks.